Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is April 25th, 2016. It is 9 a.m. Eastern Time. For those of you that are here for the first time, welcome. And for those of you that are back, welcome back. I have a disclaimer that we're going to go through first. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them. In order to invest in future stocks and forex markets, don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an offer to buy, sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses from results discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, welcome again. Let us go to the calendar. Now, there's not much news at all. I mean, news right now just came out. Business climate for the euro. Belgian, let's see, what do we have here? What were the numbers, if they were any good at all? 2.4% negative, positive actually. It's not bad. It's not a bad thing. We are going to have home sales coming up very shortly. That's going to be a very weird number. I don't know what to think. Reports are all mixed in that regard. So let's go to the charts. Now, this is crude, and for the past few days, I've been saying that crude was going to go down below 43.86, which it did overnight. It came down all the way down to 42.83, so it did come down $1, but it's not done yet. I believe that crude is going to go down to 39.50. Now, this is very interesting here, and we're going to go to a higher time frame. Let's go to a 30-minute, because I think crude's going to fall. And if I'm right about that, it's because the banks have just changed their algorithms and adjusted them. And I was verifying this over the weekend. The one thing that our software does is that it does isolate and identify when changes have been made in the market. And that is because our software is based on volume, all aspects of volume and order flow. So, we cover volume spread analysis, volume price analysis, volume divergence, and order flow manipulation. So we're able to really detect these anomalies, and when they are detected, we're able to actually see what's happening. So I was right. Now, normally I don't like to use moving averages, but I had to confirm something with a study that was made, and one of the studies was Case-Shiller, and the Case-Shiller index is based on this. It's called mean reversion. Now, you see this trade that they just played here? This is on a 30-minute. So, and you see how they hit this level again and how there are power dots right here and right here. See how this pulled back? Well, if I were to put volume into this, you would be able to see that this had actually negative volume. This one has bullish volume right now. But the reason why this is happening is because their intent is actually to go down to 42. And here is the power dot that shows it. Now, for those of you that are new here today, these golden dots here are what we call power dots. And these are actual price levels that the banks use to basically execute their trades from. These are their support and resistance levels. Sometimes, you'll find some red lines, some orange, red, some yellow, and these levels are used pretty strictly by them. Now, I hadn't really put my finger on it until this weekend, and so it took me some time to really wrap my head around this, because it was one of those things that I just wasn't sure, so I needed to confirm, and I was right. You see how right here they hit this level after coming down, because I did say it was going to come down, $1, but I was expecting it to come down to 42. You see how this candle came in, bounced right off of it, and then you see the dashes in between the candles. Those dashes are what we call the point of control, where the buyers prefer to buy, where the sellers prefer to sell at. Now, these levels are very important, and you see how it pulled back? I can honestly tell you that based on this trade is going to go short. Now, what would my risk be? My risk here would be about 10 ticks, but I don't think they're going to hold. I don't think that they're going to go long because they are using this weekly level, which they've been using for quite some time now, as a basis to retract. And these moving averages here are the 50, the 200, and the 100. The gray is the 100, the white is the 200, and this one is the 50. Now, I didn't never really liked using moving averages, and the reason why is because I find them to be distracting. But more importantly, is that it's not just the fact that they're distracting. They're misinterpreted because many people use them the wrong way. And the reason why they use them the wrong way is because they really don't understand the basis of the algorithm designs and strategies that the banks and market makers have created, which is called mean reversion. And this is a study that I found, and I wasn't sure. I knew we were on the right track, but I wasn't completely convinced until now. As you can see, this is going to go in our favor. And I'm not going to apologize for it. Now let's take a look at the 10-minute. The reason why they're doing this, and the reason why the volume price identifier, which is basically a BATS indicator. And what is a BATS indicator? It's a Bank Algorithmic technology strategy that they have designed, except that we counter-designed it based on how they use it for the purpose of decoding their intent. But it's not really decoding their intent that we're doing here. And wait, the chart's going to pop in a second. It's going to come up. What we're decoding is the actual trade. But we couldn't really do it before, or you couldn't really do it before because you didn't know what you were looking for. So this goes out to a few clients out there that I haven't been able to train and that I've wanted to train for quite some time now. So it's a matter of really making the time to do so. But I wanted to explain this because this is what I normally teach people in private. So I'm going to give you a little feel for it. Like I said, I never liked using moving averages to trade because they're distracting. Because people think, oh, they're using them to make their trades. No, they're not. They've been kind of programmed. What they're actually using them for is called mean reversion. What is mean reversion? Mean reversion is that there is a trade, and in the middle, there is an average. In this case here, here's the average. So what happens with this average? They basically pull away from it, and then they pull right back. It's like a rubber band effect. It's what I call portfolio rebalancing. And I've explained this to many of you time and time again, but some of you don't really wrap your head around it. So I'm going to have to write a paper on it or do a video for those of you that have the software. You see what they were doing here? See how this pulled right back to where this moving average was right here, which is where our power dot level was on a weekly level. That's a strong level. You see how it came down, then it pulled back, then it came down, then it pulled back. This is mean reversion. Well, now your moving average is the mean. But that's not what this is about. It's not about detecting the mean. It's about detecting the price levels and the execution. What is their trigger? Their trigger is important, and I want you to understand what their trigger is. You see how they pulled away from here, how they went up and they pulled away? See this indicator right here? I'm going to expand it because I really want you to see it. Do you see what they did here? See how they spiked it up and then they pulled it right back down, and then this one went up and pulled right back down and closed below. Not only did it close below, but it closed below the previous high, the previous point of control. What is a point of control? This is a price level where the banks prefer to buy and sell at. Now, I'm going to add another indicator here. I'm going to actually add two. And this is important because I want you to really wrap your head around it. It is probably going to be one of the most important lessons that I'm ever going to give on a Monday. And those of you that understand it will appreciate it, and those of you that don't will not. And that's just the way it is, unfortunately. But I chose this trade specifically because of the setup, not because of the time. It's the setup. And this only happens around true support and resistance levels. Now, as you can see, our trade is going positive in our favor. We're shorting it, okay? The important part is that we understand why we're shorting it. That is what matters. It's not just the fact that you're going to make a few ticks or make a few pips. No. I want you to really wrap your head around. See how it's going positive? Look, we're 18 ticks, 14, 13, 14. So as soon as this comes up, you'll see why. Give it a minute. It's NinjaTrader. It's not me. It's not my computer. Okay, there we go. Come on, baby, pop. And this same strategy is being implemented right now in FX and in stocks. So our software works both future stocks and Forex on all three asset classes. Now, if you notice, it came down 20 ticks in one shot. Look at where it's at right now, 16, 17. So just bear with, the chart's going to pop in a second, and you'll be able to understand. But more importantly is you'll understand why we're the only ones that offer it and have it and understand it and teach it. It's not just about having the technology, it's about interpreting it, understanding it, executing it. Why? Because at the end of the day, we're looking for the same results. We're looking for positive results. We're looking for understanding of what's happening. So give it a minute. It'll come up very shortly. Come on, populate. The volume indicator takes a lot of memory, and it's just one of those things. It's the tick data. Bear with. But you can see here how from our entry we went practically 20 ticks positive. It's almost going to come out, guys. Don't worry. We're not going to kill Ninja yet. I'm going to have to change minutes on this thing. My God, man. Seriously? Look at that. We're positive 23 ticks. 22 cents, 23 cents. Come on! What's the matter with you? Cannot. Oh, you're kidding me. Oh, there it is. Finally. Okay. Oh, for crying out loud, really? I changed it to the 15-minute. My bad. I'm sorry. But don't worry about that. The important thing is that you understand exactly what's going to happen right now, that this trade is going to go positive in our favor. And not bullish, but bearish. So give it a minute. It's almost there. Don't worry. We'll post a video. You can fast forward it. So this strategy that they've implemented is probably what's going to save you from getting slaughtered by them. And the reason I say this is because it was right in front of me. I couldn't really pinpoint the theory itself, so I started to research and see if I could find some papers that some of these PhDs had written. And I found a few, and it was just amazing how it just all came together. We always knew that the power dot levels were very important, but we didn't know was how they were using the moving averages. Everyone is using them the wrong way, and I mean the wrong way. So come on, stop taking your time and pop. We're up 15, 16 ticks. We're almost there, guys. Come on. Don't make it hard on us. I can't wait for them to go to version 8. I really can't. And I only have 50 days of history on this right now, which is hardly nothing. Come on. We're almost there, guys. Don't despair. Let's look at the calendar in the meantime then. All right, so we got right now within the next 45 minutes new home sales. Now, we're going to look at another another pair. We're going to look at the Dow, and we're going to look at Forex as well. And you're going to see practically the same. Oh, there it is. Thank God. Okay. Now this is volume profile. Now, I never use this thing. It sucks. You couldn't trade off of it, even if they paid you. It's just horrible. But you see how they played this trade? Now, on the 10-minute, it's much better. But look at this. You had volume divergence. That's what I wanted to show you, is that with our software, you're able to identify volume divergence when they play this play. Now, on the 10-minute, it's much better than it is here. What is the play that they do? That they go to specific resistance and support levels. And what they do is that they pull back. Now, these are what we call volume momentum shifts. And when they do this, they set up to go in the opposite direction. Why? Because that's the purpose of the trade. It's not to offend you. It's not to distract you. It's to basically beat you. But now we're able to see this. Now, I'm not saying every time that they spike, trade. No. Wait for it. See how they came down here? See how they came? They bounced right off of it, and you see how where the candle closed right above the point of control of the sellers? They did the same miserable thing here at the open. At the open, I said, you know, that it was going to go short, and it did. It came all the way down to 42.90 from 43.77. Now, I called short last week on this, and it did come down. So right now, what are they doing? The same trade, except now they're bouncing right off the trend dots. And the trend dots can be used in a similar fashion as the power dot levels. These levels are so important to these conniving, despicable, misleading, I can't say the word, programmers, that in reality, what they do is that they do this to actually trick us and mislead us in the wrong direction. If it wasn't because of the volume indicator that shows us volume divergence, and for us to actually see the real volume in that candle, we wouldn't be able to really identify and understand what was really happening. Now see here, for instance, in this specific candle, you got, look at how much volume they shoved into this thing. I mean, it was huge. All bullish volume, and then boom, the negative comes in. Usually the second candle and the third are the ones where they pull this off. The second one had negative volume by 1636. The third one even more, and they came down. Now, here's what I don't like about this trade. They never really spiked up. They just came down. But you see how they're using the trend dots as support levels, and there are pivots right here. This is why the pivots are so important. These magenta dots, or purple dots, however you want to call them, are what actually map out the next levels in the trade that they're going to go to. So this one here, did it come down here? Yes, it came down here, and it bounced right up above it. And is there anything wrong with that? No, it's understanding what's happening. Now, we would have been up 18, 20 ticks right now. You know, it's pretty much a matter of closing it because they're going to go the opposite way, but that doesn't matter. The important thing here, and when they do this, make no mistake, they come up and retest. They're real slick about this. When they make a move like this, they come up, retest, and then they pull. So don't be surprised if at the end, the point of control in this candle change and come up here, and the candle actually closes below them. This is a signature move that they're doing, but we couldn't really identify a true imbalance in order flow if it wasn't for this indicator. This indicator came to basically confirm what they're doing and how they're driving the trade. Now, the moving averages, many people say, oh, they use them as support and resistance levels. No, they use them for what's called mean reversion. And if you look it up, you're not going to believe me when I tell you it took me hours to really find these papers because, it's not something that they normally put out for the public. And it really takes a special mind to really understand this, But at the end of the day, I'm going to break it down for you so that you realize that the real cutting edge technology to pull this off is only here. That's the only thing that matters. So let me remove some of these indicators now so that we can go to the next level. Now volume, let's kill that. Let's kill the price identifier. Actually, no, we'll leave that. Let's remove everything, then we'll go look at something else. So now that you understand what mean reversion is, or I hope that you understand it, hopefully you'll be able to wrap your head around it and really say, okay, maybe this is something that I really need to look at because it's not something that I understand. And you know what? You're right. Retail traders really don't understand this. These programmers that they have out there have done a really good job of hiding the strategy. In its most simplistic manner, they've deceived us until now. So now we're going to break it down and we're going to really rip them limb from limb. But give it a second, and it's the data series. I got to lower the days. That's why this is happening. We'll see how many days I have. So let's see, we got a few minutes left. Okay. All right. Let's go down, 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 down. Come on, come on, come on, come on. We're almost there, you're almost there. Now, these aren't counter trend trades. Don't think them that way. At the end of the day, you'll see that if you find that same trade in a higher time frame, it will usually play out for the next 4 or 8 hours. And that's the one thing that many times we lose sight of because we're looking for the quick fix. We're looking for that quick trade. And you know what? You can find that quick trade. I'm not against you doing it. Here's the problem with that. Give me 1 second. I gotta type something real quickly. All right, awesome. Okay, so let us go into this. Now, see, how long did this trade take? This took forever. 2:15 in the morning, my time. Okay, this is 5:15 in the morning a.m. And we are right now at 6:15, which is 9 a.m. So this is 5 hours. You see what I mean? This is a 5-hour trade. These guys are really despicable when they do this. Now, let me see the data series. Oh, that's why 200 days. Sheesh. No wonder. Let's go to 45 days. It'll be faster loading, and then we'll be able to move on to the others. Oh, man. This is going to be really interesting. Don't go away and pay attention. All your dreams are going to be answered tonight. All your prayers. Excuse me. Oh, I hate when that happens. You always have a little bit of that miserable cough from this flu. Now, you see how they came and retested? I really like to see this on let's go to a 7-minute. We'll look at it for the last time before we move on. I just want to see it real quickly because I'm thinking oil's going to come down to 39.50. 39.50. And if, oh yes, you conniving. Okay. All right, so they played this trade here, but they are coming right back down. Yeah, see how they broke the trend dots right here? This is a weekly level. Look at how they've traded this thing. So let's short it here anyway. And we know that you know, if anything, it may go against us 10 ticks. It may go against higher, but still. This is where your stop loss should be, 43.92 normally, okay? Now, we know they're playing this trade, and they've done such a good job of really disguising it. But in reality, this is the only thing that bothered me when they came down. See how they closed right above the point of control? I wish they would have done it here or here. Now here, in the 7-minute, you can see this more clearly, and they did it twice. So it's the same pattern that they use in order to execute what's called a mean reversion strategy. And they do it with power dots as well. Now sometimes, in the higher time frames, you're able to see it even much clearer. See how they did it here? Same bloody pattern. Nothing changes. See how they did it here? But more importantly is that, and see how their power dots right here, and they see how they did it here? These mid-range power dots do serve their purpose, and especially when they are in between these three moving averages, which is the 50, 100, and the 200, which many people interpret in the wrong fashion. Many people say, oh, once they break the moving average, it's going to go. No, 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 and no. That's not how they've programmed, you know, to actually execute the trades around them. It's called mean reversion. See this level that it came down? Let me show you something. God, why did that happen? Where was it? Was it here? Somewhere here. Hold on, I want to show you something. See how it came down right to this level? And see how it bounced right up and then broke right through it? See how this is basically its mean. This is the moving cross that you're looking for, but you're not. In actuality, I find, and see how the power dots formed here on the 7-minute, and then here again before they came down. In actuality, what I'm trying to show you, this is in higher time frames when they hit this trade, of course, and then of course right here. So here they're playing the same trade again, but this was the trade that they were originally playing. I really like this trade to the bottom, and I think that they're going to play it to the bottom, but just not yet. It's one of those trades that's going to take some time to evolve, but they're going to implement it because this decision pretty much has been made. If we look at this in a higher time frame, and I always believe that sometimes you have to go high in order to interpret what's going to happen next. And that's the importance of this indicator, is identifying that pattern. That pattern is the most important pattern that you're ever going to identify, because it's the one that they use to make their decisions off of. This is, and like I said, this is the 180. Do you see the same pattern taking place here? Do you see the trend stop here formulating and flatlining? Do you see this pivot that they're using? I can assure you that there's a power dot level in higher time frames right around here. If this pivot is here, and this is, I believe, on a 60-minute, and that's why they haven't broken it, but they've been using this range. Now, when this trade came down yesterday afternoon, it's the same thing. I knew they were going to play this trade, and they did. Normally, when the power dots form, it's not the moving averages that should distract you. It's the fact that they are using the moving averages for what they call mean reversion. So they're reversing their direction against the moving average. They're using them. Now, I forecasted this sucker is going to come down to 39.50, and I don't think I'm going to be wrong. Now, it's going to take some time, but they're going to play it. And when they play it, it's going to be a real shock to everyone. So right now, let's go look at something else so that we can actually make a few pips. Let's take a look at the Dow, because the Dow, I think, is, and you see how it came down? This is on the higher time frame. If you can pinpoint this trade on the higher time frame, you win, because this is a 3-hour. Yeah, a 3-hour. So if it's a 3-hour trade, that means that the next, as soon as this candle closes, the next one comes right back down, which is what I'm expecting it to do, but we're going to wait and let it play. Let's take a look at the Dow. And see, this is the beautiful thing about their mistake. Their mistake is that they themselves don't really understand and know why they're doing things. But now you will. You see the same trade, how they came up and they pulled up and now they're pulling down. I still wouldn't take this trade. This is on the Dow. Why? Because you see how they came in? This is a retest. In actuality, in the smaller time frames, you will see that they're going to play this trade to the upside. Just not yet. And this is the type of information, believe me, I don't want you to use the moving averages in the wrong way. You see this trade right here? See how they pulled this off right here? How they came down and pulled? I can assure you that there are power dots. Number one, there's a pivot here. But let's see if there's any power dots here that we are missing. Right here and here, they hit this pivot. Let's see. No, not there. On the higher time frames, maybe. But we're looking for the, see how it's going up? Normally, they come back, retest, and pull it. This is your trade. It's to the upside. Now, why? Why not down and why up? Well, they've used this level before as a support level, and they've identified the pivot here. What did they do differently here? It's when they came down that they came right back up, and this candle settled above it. Now, being that said and done, how high is it going to go? Good question. It's going to come right back up to 17,921. That's where it's predicted to go to. Now, why? Because you see how they played this trade here? This was at 1:30 in the morning, which is 4:30 in the morning Eastern time. It's 1:30 a.m. my time, and I will be sound asleep at that time, ladies and gentlemen. If you wake me, I will charge you, because I take my sleep religiously. So what happens here? See how they played this trade here? They did announce here. Now, here's the beauty behind this, is that when you incorporate the volume indicator, oh my God, I feel so bad. This is just, what we're doing here is criminal, because you're never going to see it again, except here. You're going to see how we break this thing down piece by piece, inch by inch, tick by tick. Now, some of you have had a hard time with volume divergence. Here's your volume divergence right here. That's where it is. Now, here's the downside to this trade. What is the downside? That they're using the trend dots as support and resistance levels. So since you entered here, if you know what is happening, you're expecting this to break above it. So we need this to break above 17,872, okay, which is 2 ticks away. If it does, which more likely looks like it will, then at that point we know that they're going to play it. But here's what I want you to see. What I want you to see is how they've played this trade and how they announce it so easily, but in the most distracting way. They're real, they're real deceptive. And unless you know what you're looking for, you're going to get slaughtered, killed, beaten, served, domesticated, demoralized. And while there's other adjectives that I could use, but believe me, I think that this is the one that makes the case for it. Now, you see how they played this trade here? They did the same thing here, and they pulled down, and they did it here, but it was short-lived. So when they did it here on a 10-minute, they really held it. Why? Because they had already done this already. And they had already began their move to the upside earlier in the morning at 1:30 a.m. Pacific, which is 4:30 a.m. Eastern Time. So they had already announced they were going to go long, but you really couldn't tell if this was going to be a continuation move or it was going to be a complete reversal. You know, sometimes you just have to wait for it. And that's where the moving averages come in. But don't use them in the wrong way. Don't be distracted by them. Now see how they pulled this off right here? How they came up and pulled right back? This is the one thing that I don't like sometimes. And you see how it has negative volume right now? I need this to go bullish. What's my risk from 17,867? It's actually right below the pivot, 17,858. 10 ticks. That's my risk. But if I'm right, and I believe I am, then this thing should go right through the roof. And if it goes right through the roof, then what we just did is basically broke the code. This is where real traders are defined. And beginners are left behind. You can be a beginner, but if you don't have the right tools and the right education, you cannot succeed. You can only lose, which is unfortunate. And that's why when I tell people that I train them one-on-one, it's for a reason. You know, I need the time to spend with you. I really do. I know I can get you to the other side. I know that I can teach you to interpret this pattern. I can teach you to use these indicators. I can teach you to use this strategy. And I can teach you to win. Because we're the only ones that created the technology to actually beat them at it and use it against them. It's a strong statement to make. I agree. But I think that at this point, it's the theory and the technology behind the result that matter. So, for those of you that are interested in learning more, you can email me. This would be the moment because I'm going to get busy with some of my clients in training them. And let's just say that you're going to be left behind. And I would hate for that to happen. So my email is, I'm typing it in right now, it's ricardo@phoenixtradingstrategies.com. You can also call me. My telephone number is 818-431-1357. Don't be afraid. I don't bite. I will only answer your questions. There's nothing wrong with answering questions now, is there? Now, like I said, see how these moving averages are playing out here? Many people would say, oh, they're going to use them as resistance levels. Well, they did right here. But only because the real intent was to really go to the upside. And you see how this candle just pulled all the way up. Now, the market just opened right now. Make no mistake, opened 8 minutes ago. So long as this continues to trade and the next candle that opens within the next minute opens at or above this candle, then this move is a signature move to the upside. No question about it. But if it pulls back down, then we exit. There's no problem. There's no shame in that. You know, are there any questions? I think this would be a good moment for you guys to have questions. It's not a bad moment. Now the Dow right now is down 48, 49 points based on the open. And as well it should be. But I think it comes right back to the open based on what I'm seeing. And if I'm right, we're going from 17,867, which is our entry, to 17,937, which is not a bad trade. Like I said, only if, and see that's what I was concerned about, is this reversal. See when they did this, see how they pulled back? This is why you have to watch this trade, because it's important. Now, when they pulled this one, they did go long, and they have a pivot here, but now this is where it becomes a little tricky because you just have to watch for it. Granted, they did pull the same trade here, and they pulled the same trade here. So you just have to, when they do this trade, you have to watch it. That's all I have to say. You just got to be in front. Now, if this candle settles above the point of control that it's formed, and we'll see because it's not over yet, then at that point, that's when that's when we know that they're actually doing this mean reversion trade. If not, then they're simply following this trade that was already in play. But I don't think they're going to go down too much, but I'm not willing to risk more either. So it's a matter of really sticking to your guns. Now, what I normally would recommend is that you're going to have to use at least 2 charts. And the reason I say 2 charts is because you're going to need to see one in a higher time frame versus one in a lower time frame. Because most of these trades, you're going to see that they play out on a 2-hour, 3-hour, 4-hour. And if you see them setting up in that time frame, then you know that then you'll pretty much interpret the real direction of it, not based on the moving average. No, the direction of the moving average means nothing at this point. It's how they're using it and how we're interpreting it, which makes the difference. So at this point, I'm going to wait. If I see that it holds, then I'll probably stay in it. But if not, depending on how this closes, I would need this candle to close above the body, to close above the point of control. That would be my only prerequisite. Just like this one closed below it, and see how they used the moving average. That's my only reason why I'm actually going to get out, because I don't like what they did. They really pulled a fast one here, and we had power dots right here. See, these are in the middle of the range. So sometimes you gotta have your eyes open, because they'll pull this trade, and if you're not really looking at it, they will give you a good whipping. But this isn't over yet, So like I said, it's just a matter of interpretation and watching it. And if you do so, you're not going to be caught by surprise, because you'll be able to understand why the power dots are so powerful and why they are a main factor in your decision process. This ain't over yet. It's over for now, but not yet. See, the crude trade is still to the downside, and we're about to go into FX. Because I think, if I'm right, we're going to see the US CAD make a reversal. See? Now here they pulled the same thing, but remember, it's still trading under 43.86. So long as it stays under 43.86, they got to come down. They've got to crash. No question about it. They crashed overnight. I called it since Friday, and I said that it was going to come down. And I usually post on my LinkedIn trades that are going to take place and are going to happen. And usually I will give you a 2-hour window. So if you're not connected with me on LinkedIn, shame on you, because you're missing out on trade forecasting that you should be aware of. And I only do it for my clients, so you should. And I only post on crude, on the Dow, and on gold sometimes. Let's take a look at gold. Gold is really, I'm still thinking this thing has to come down, no question about it, because it failed again here, and it should be on the downside. So we'll come back and we'll look at it, and we'll see how it plays. Let's take a look at gold real quickly, and then we'll go into the FX side of it. Yeah, just look me up on LinkedIn. My LinkedIn is just under my name. I'm the only Ricardo Menjivar, and I've had it for years. Now, here's gold. Ooh, I like this. This one looks pretty good, actually. They're doing it right off of the moving average, but I want to see if there's any power dots here that we should be looking at. And if there are not, they're right here above, right here. Ooh, right here, look, right here. 1239.70, and right here at 1241.30. So Why is it important to map out your trade? Let's talk about that. We missed this trade, so forget about it. I'm not even going to take it. It's probably going to continue to the upside. I don't like getting in the middle of a trade when it's in the middle of a range. And the reason I don't, because this is a 120-minute level, this is a 90-minute level, and this is a weekly level. So just look at this trade while I get something and come right back. All right, let's take a look at this. Yes, well, there's a power dot here. We saw that, but I'm not convinced about taking that thing short. So let's go look at something else. But as you can see how they play these levels really, really, really religiously. They did it here, and they played it from up here. You had power dots. And I'm not saying that they're not using the moving averages. They are, but not in the way that you've been normally taught to see them. Let's maximize this. You see how they played the same trade right here? They went up, and then they came crashing down. And usually it's right after this one. This one usually has negative volume, and this one has bullish volume, and then they do this. So it's a very similar pattern that they're using, and they don't apologize for it, and neither will we for using it against them. It's that same pattern. Here they did the same thing, and this was at, again, that weekly level. So whenever they do this, you know what you're looking for, and they went right back to the mean, to the moving average, and the power dots formed, which basically said it's over, and then they did the same thing, and they came right back down. So at least now you know what you're looking for, which you didn't know before, but now you do. And that's why this indicator that I'm showing you, the dashes in between the candle, is so crucial to use, because just like it is here, see how they played this, and power dots here, they came down, then they went right back up. And this is, again, to me, it looks like it's going to go long. I just wouldn't trade it for the downside. Even though I'm seeing volume divergence here, I'm not sold on it. See? I'm just not sold on that trade, at least not yet. I think it still has room to go further away from the mean, period. And if it does, then, it should go up. But gold is, if you're not getting gold from the very beginning, don't trade it because you're going to get whipped, beaten, served, slaughtered in many ways. Let's go to the CAD. You want to keep life simple by identifying and interpreting real trade opportunities when they're there. And this is the problem that many of us have. Patience. We don't have patience. Patience is a virtue. And without it, we lose. It's that simple. Without patience, we become a victim of our own demise, which is very sad. Give it a second, it'll be right up. But I think that we're all grown up enough here to realize that we need a little bit of time to just take a step back, relax, see, they pulled that trade here, conniving right off the power dots on the 10-minute. They did it here too. This is a continuation of that trade, but I think it's over. I don't think that they're going to hold because you also have power dots here. And so, again, you have to go back in history and look. In this case, they came pretty much right back to the open. So if they don't play the trade from here, if they don't break this level, they got to go right back up. And if they go right back up, it means crude comes right back down. So I'm not sold on it here. I'm not sold on this trade quite yet to the downside, even though they've already played it. And normally they'll play 7 candles. It will be 6 or 7. 1, 2, 3, 4, 5. I'd say one more candle to the downside, and then after that, it should go long. And if that is the case, then crude will come crashing down. So just kind of watch it. And you can see the volume divergence here. This is where the volume indicator becomes very crucial. And you just, sometimes it's the interpretation is so hidden that it really, really bothers everyone. See, normally I would look at it from here, like this. And if this settles up, then that means up. But right now, it has negative volume. You can see it on the left right here. It has 11 million negative volume, 12 million. And you have this pivot here. So that's why I'm not sold on it. And you see how they played this trade? This is the one that really mattered, right here at the top by the power dots. Nothing else mattered after that, because it went up, and then you could say that from 126.97 to 26.71 was the trade. So right now, that's not really the trade to be looking for, because we're not going to get anything out of it. Let's go look at the euro, see if we find anything on the euro. Now in the morning, there are great trade opportunities. You just have to know what you're looking for. And that's where the market analyzer comes in. The market analyzer will normally give you that information. I have it on a 30-minute. So these are the trades that on a 30-minute, okay, it's going to populate in 1 second, would matter. There. See, the euro played that trade right off the trend stop. See how they came down? They bounced right above it, and they did it here. This was the entry. Normally they'll do it once and then they'll retest it and boom, they'll make that move. So in this case, let's see what we're looking at. Yeah, it's a straight mean reversion trade. They pulled it off here and they went right to it, came back, and now they went right back above it. But again, don't use the moving averages the way everyone else does. You will lose. We're not doing moving average crosses. The way the moving average should be interpreted is specifically as a mean. You know, the Case-Shiller index is based off of this theory, except that he has it wrong because he's doing it off of 10 years, and 10 years don't really matter at this point. What matters, let me open this up, is what they're really doing. Now this is a 20 pip trade. No, 12 pip trade. And they've been here before. So if this thing closes right below this, and you see how these pivots are right here, those are very crucial. I'm sure that in a higher time frame, there are probably some, yeah, right there, look, right there. Those are power dots. And these are 1, 2, 3, 4, 5, 6 days away. And those power dots right there are very, very important because right now, if they don't break above this level and they close right below this, then this is the trade to the downside. And that means that we should have it come right back down here to 1234. So let's sell it and see what happens. What's our risk? 5 pips. You know, once you start to understand this pattern, then it becomes pretty much secondary. And they play it over and over and over and over and over and over again. The only reason why I went short, number one, is because I went up, pulled back down. This trade, see how this candle went, how this bar went all the way up. Look at how much volume they put into this. Normally, this candle will have a tremendous amount of volume, and then the next one will be light, and it will move in the opposite direction. So this is also a pattern of order flow manipulation on their part. You got 209 million on the buy, 126 on the sell on this candle. You had 83 million in bullish volume net. This thing should have gone through the roof. Through the roof, and it didn't. And because of that, that is why this looks and should come down. And if I'm right, it may not be a big trade. I mean, I'm really expecting it to come down, you know, hit these pivots first, 1245, then 1242, and then come down here to the power dot level here, 1237. Not a big trade, but we're not doing this for a big trade. We're doing it for the understanding of what is happening and why you have not been able to win. Why haven't you been able to win? Because you haven't really understood what mean reversion strategies are. And this is what these guys have based them on. So this exercise today serves two purposes. One, for your understanding, and two, so that we can see it in play. You know, at this point, there are no trend dots here. They pretty much broke through them, but they did find the roof right here. And they had already done a mean reversion trade to the upside. So this would be the third attempt, and if it fails to the upside, it's got to come down. Now, I'm not saying it's going to come down to 112.14. No. I would be content if it comes down to 12.45, and then from that point, let's see where it goes. Nothing more and nothing less. A very simple trade to take. Now, I like, you know, the wicks mean a lot because they do, but more importantly is the point of control. See how it didn't open, it just gapped right back down. That is to some degree important, but still, we're, you know, What's my risk? 5 pips. That's all I'm willing to risk. I'm not willing to risk more than that. I don't like the way that they used the trend dot right here because it turned and they used it as a support level. So I need this candle to really break below it. And this is where sometimes you just have to watch it, and if it plays out, then you know that you got in the right trade and that it's going to play in your direction. So it's just a matter of, like I said, being patient and letting the trade play out. The volume is to the negative. This one is trading with negative volume right now. So if we're right, then everything plays out in sequence. What did they do? They went to a high, pulled right back down from it. They did the same thing here, pulled back down from it. The point of control of the buyers is up here. This one gapped to the downside, which is usually the case, and it's doing so with less volume. See, this candle had less volume. See, look at that, 36 million on the buy, 48 on the sell, where this one had 200 million on the buy, 127 on the sell. No, 132. This one had, no, 200 million, 126, forgive me. This one had 36 and 48 on the negative. So this one right now has still negative volume. 37 on the buy, 42, 43 on the sell. So long as it closes negative, and usually you'll see the trade kick in the third or the fourth candle. That's where the trade will actually execute from. It just takes time. And this is where, you know, sometimes it makes sense to look at a higher time frame, only because you want to confirm that the direction of the trade is really in play. So you can't really see it here. What I like about this trade is that it came up, never came all the way up, and then came right back down, and they did it right off of this high where they formed these pivots. But they really never came up above 112.62. You know, that's, to me, this is where the stop loss should be, because it's basically like this. Let's say we did it from this level. No, we'll do it from here. I like here. Why here? This is one level. This is another. They never really came all the way to the top. And usually what they do is that they'll come up again and then they'll come right back down. This is usually the play that they make. So right now it's really just a matter of being patient and watching it and letting it play. On Friday we took a trade very similar to this one, and then suddenly it just went pop, came down. I'm expecting the same result here. Again, my risk is very minimal. You know, I will not risk, in this case, more than 5-6 pips. Why? Because I'm looking for a specific result. If I don't get it, then, you know, my loss is reduced. But if I get what I'm looking for, then the result is very high. And so at this point, this should be setting up. I mean, we just had news come out on home sales, and they were negative. But just because, then they weren't that negative, to be quite honest with you. But they're not playing or trading off of fundamentals. This is where a lot of people make a mistake as well. They think that right now the banks are trading off fundamentals, and not necessarily. They have a specific cycle that must be completed. And once that cycle is completed, then that's when basically they will go in the direction that they need to go, not beforehand. So sometimes if you see that a trade goes in the opposite way of the news, it's for a reason. It's because they haven't finished their cycle. That's basically what it is. So normally I will give a trade 1 to 2 candles. If I don't see it play within the first 2 candles, then at that point, you know, I'll just step out and reassess and wait for them to actually pull the trade. You know, sometimes you just have to wait for it. But remember, here's what we didn't like: the fact that they used the trend dots as support levels. I like the fact that they reversed it here, but I would have preferred if this candle actually came down, which it didn't. So to me, this is as far as they're going to go. If they don't go beyond this level, then they got to come right back down. And that's where it plays or it doesn't play. But your execution is simple. Your risk is simple. Everything is minimized. And you have to look at it from that perspective, that everything has to be minimized. If not, if you're not willing to take risk, don't trade. Because every time you take a trade on, you're taking risk. In this case, we're looking for calculated risk. We're looking for a calculated result. And here, we knew that they would have to come back up and retest. This is a normal thing, and you'll see it in the volume. Normally, you'll see one candle that trades inside the previous one, which is this one. And then this one is the one that should come down like a stone. It's either the third or the fourth candle. If it's the third one, then we know we're good. If it's the fourth one, then same result. Nothing changes. Now we're at break even. It's more of it's not even a standoff at this point. And while we're looking at this, let me remove the volume indicator so that we can go look at crude. Crude came right back down in our favor. So bear with. I know it's hard. It's not me, it's Ninja. But you know what? If it wasn't for the tick data that Ninja provides, this indicator, the price identifier, which is BAT's indicator, would not work and we would be at a disadvantage. Now remember, when they do this, there is one candle that will play this trade, this same pattern, and it looks like they're playing it right now. But I want to show you crude because I think that you deserve to see what you came to see, which is the original trade play out and the direction that it's supposed to go in. It never went against us more than 10 ticks, ever. See? What's that pattern? The same pattern, right off of a weekly level, came down. And I expect this thing to really sink, to be quite honest with you. Once it breaks below these pivots, this would be the second time that it hits these pivots, these levels. But once it breaks below, we're on. I mean, this trade is so on, it's not even funny how on it is. That's 20 ticks, 20 cents. Not a bad trade for a U.S. session. Crying out loud. Sorry. See? 30 ticks. $32 ticks. What do we call this? Mean reversion. Now, we'll come back to this one. I want to go back to that Euro trade because we're only down 1 pip, and I don't like being down 1 pip, to be honest with you. it a second. Now, you're only going to see that trade off of support and resistance levels. Real support and resistance levels that are identified by our power dot algorithm. Okay, so here, at this point, I would have expected this to come down and sink, and it hasn't done it yet. I'm not saying it's not going to. I'm just saying it hasn't done it yet, and I don't like the way they're using these trend dots. So, because of that, because it didn't execute, well, let's see if it plays now. Because if it doesn't play now, then I'm not interested. And we're up 34 ticks on crude, but I want this one to really come down and just hit someone. And this pivot is where it's really having a hard problem going below. So, no, not playing. And when it doesn't play, I'll just exit because it doesn't make sense for me to stay. Normally, if you're going to see a reaction, like I said, it should be on the fourth candle. If you don't see it on the fourth candle, get out. Because you're not going to see anything happen any further from there. See here? They broke through these pivots. It bounced right off of this one. And this is where the pivots become very crucial to our strategy because they identify and map out the next price levels that they have to go to and that they have to address. Because if they don't, then you have a problem. So in this case, you know, I still believe this thing is going to come down, or it should come down further. But we don't really have much more to prove in this regard. In this case, I mean, it either breaks or it doesn't. It's already broken through the trend stop. It's broken through these pivots. It's right here in these moving averages. And again, we're not trading a moving average cross. Don't ever look at moving averages like that again, ever. Because what will happen, see, in between all this chop, look at what they did. They came down, came right back up, retested it, and then they pulled right back down. If I show you the volume indicator on this thing, you're going to kick yourself, and you're going to say, what in the world is this guy preaching? Because this makes no sense at all. You're right. Everything that they've designed to trade against you has no logic or reasoning behind it. And they did it on purpose to confuse you and confuse me. Here it is. Look at the volume. Is there volume divergence? The answer is yes. We're using a 10-minute. You know, this is a thing that I had to really go and look at this to really understand, go back and see why they were doing this. And look at the moving averages. They're right in the middle of a 600-minute and a weekly level. But I'm thinking they're going to come down crashing like a stone. 41 ticks. 37, let's see why. Okay, there are power dots right here. Now this is a mid-range level. We've talked about these levels, how they use them as support and resistance levels sometimes. So this is where basically sometimes you just want to, you know, if it doesn't play any further, then it doesn't play and just step off the trade. It's that simple. So right now, where we're currently at is, you know, 40 ticks. That's 40 cents. A 40 cents move in crude is huge. We would have had the same result in the Dow shorting it. You know, I just needed to watch that trade that they played. But at this point, I think that we've pretty much proven. And if we look at the US CAD real quickly, because I'm waiting for this to break down even further. There it goes. Look at the US CAD trade. You're gonna see that same reversal that I told you about, but I wasn't too sure on it. It wasn't clear enough. And the US CAD is just playing the opposite side of the of crude, of crude oil. That's it. Give it a second. It's that volume indicator. God, I should have removed it. I should kick myself. You're almost there. You're almost there. Be patient. Be patient. We're 39 ticks positive in crude still. So if you did short it, that would be a good time to probably exit. Because remember, it went against us about 10, 12 ticks. So that's a 50-cent move. Even though I think that this thing's really going to crash, but, you know, if you're intraday trading, that's a good trade to basically exit from. We're almost there. Come on. Okay, finally. Yeah, see, they played it right back up. But now they're right back here where these power dots are at. And they moved pretty swiftly. They went from 126.72 to 126.93. You know, 20 pips is not bad, but not great, not a great trade, because it wasn't. Let's be honest. So let's remove the volume. Let's go back to crude, where we're at 42 cents right now on that trade. And on Friday, I actually went over this with a client of mine. She's only trading crude, but she hadn't really wrapped her head around what was happening. So she called me, and so I made the time. You know, sometimes when you guys have questions, you know, just Skype me. And if I'm around, you know, we'll sit down and we will go over this. I will take the time to walk you through it again. And this is my Skype, Cardo@PFG. If you didn't have it, here it is again. Okay, so see how it's coming down now? I don't like that. And that's why crude reversed. So that's why I said it was, when it was at 39, it was time to basically jump ship. Those power dots, you know, are very, very crucial. Real conniving. And there are power dots right here, right smack in front of you. So now normally, once a move like this takes place, well, it's usually a 7 trade, you know, a 7 candle trade the minute they go short. But I'd say if you were really, really, you know, done, and I seem to be done on this, I would actually take profit. You don't need to prove anything else. You know, sometimes steering clear, taking what's on the table already is better than leaving what is already on the table. I mean, we would have taken 39 instead of 30 cents off of this trade. And that's not a bad thing. We still won. Question? Losing candle. I guess you could call it that. So let's go look and see if we find something else. Now, the U.S. CAD, based on that, based on what just happened, because they were trading off of power dots, is a good opportunity to short, I think. We'll analyze it real quickly, and if they play the same trade, then we'll play the same trade. As for crude, probably will come up, but because they're trading below that weekly 43.86, I think eventually it will come crashing down. I'm projecting that for the next few days, it'll come to 42 and it may make a run to 39.50. And that's because I looked at it in the higher time frame. We'll look at it in the higher. See, look at that. These conniving. Oh, God. We missed it by... sometimes I just want to pull my hair sometimes when I miss a trade like this. Look at how fast that moved. Went from 126.93 to 126.75 in one candle. Now, sometimes in FX, you want to go into the smaller time frames. 5 minute, you'll usually see it as well. But if the US CAD came crashing down, that means that crude will go right back up. That's why I said get out. So are there any questions? Oh, you did. Nice. I'd get out right now. 126.91, you shorted it. Now that's a smile. Okay, yeah, see, they came down. Yeah, I'd take what's on the table. And see how they pulled this trade on the 5-minute? Right here is where they did that trade. They came up, they pulled it, and then bam, they just slammed everyone. That's the thing about FX. It's really aggressive. You know, during the European session, they're really nice about it, but during the US session, they're just cruel, mean, and unusual. Trial shipping it. Stop stipping it. So, and you can see again, it's a mean reversion trade. Your moving average is your mean. Not trading moving average crosses. That's not what we do. I could care less about moving average crosses. See how they traded it right here? This was a beautiful trade to the upside. Beautiful trade. So let's go look for something else because these trades are over. Euro New Zealand, huh? That's always an interesting one. Always an interesting one. Now, for those of you that have questions on the leader follower, send me an email. Skype me, call me. I'll explain it to you. We'll talk about it. I think it's something that you will benefit from. Just give it a minute. We're almost there. Oh, missed it. I hate these guys. Same trade. See, look at that. They did the same thing here. And look at this. See how they had this level in the 5-minute? I mean, come on. You look at how many pips you could have made on this trade. I mean, all night long, since 1:30 a.m., 4:30 a.m. in the morning, they've been trading the same trade. Then they finally kicked from 163.79 to 164.22. That's a 50-pip trade to the upside. And they're still playing, that trade to the upside. I wouldn't take this trade down right now because they're bouncing right off this pivot. And I'm sure that there's a power dot level there, right there, and pivots. See the power dots? See the pivots? History will repeat itself. Make no mistake about it. They love history. They do it better than anyone else. No one trades history better than they do. Stopping. Trial stopping it. So at this point, I think we're pretty much done with this trade. The thing about the Euro New Zealand, it has a mind of its own, and it just continues sometimes. And normally, once they execute a trade, they'll go 3 to 5 candles. They will. But we're late, and I hate being late. If we would have been there a few minutes earlier, then maybe. Let's take a look at the pound Swissy, see if we find anything. Wait a minute. I know, I hate waiting for the minutes. It's annoying. It really is. The crude's trading up 43.42, 43.44. It's going to be crashing down. Conniving market makers. Silver, gold is up. Gold went up, like I told you, it's up 67. Okay, now here we just may find opportunity. This is a pound Swissy. You see how they played this trade? How they came up right off of this level? This thing is going to go long. This thing is not going to go short. But we need verification. I hate this dot right here. But they've already bounced from it. So I would, at this point, consider a long trade. Original direction was to the upside, but they've been playing to the downside. So it looks like it'll be a reversal. Excuse me. A short-lived reversal. I'm not that keen on it. I'm not sold on the idea of this trade. There. Sounds like I'm moving it. I'm not sold on the idea of this trade. It looks like it's going to pop. I guess if we were going to take this trade because it just broke above this power dot level, which lines up with this, it would be one of those, but I would wait. Sometimes, like I said, patience is a virtue, and it's the one thing that we lack. But it looks like it's gonna, see, that's what I didn't want, that reversal. That's why I said I wasn't sold on it quite yet, because they're using the trend dots as resistance levels. Now, sometimes when they do this trade, they'll come back and retest. So if it comes back and retests and doesn't break below this level, then it should go up. That would be the assessment, of this trade. And again, they've already played this mean reversion trade. I mean, they really whacked it from this level, which is a 240-minute level, 140.64, all the way to 141.37. That's a complete trade. Complete trade. Now, if they hold, then they should go back up, but like I said, I'm more interested in waiting for it. Let's wait for it, wait for it, wait for it. Nothing. I hate when they don't do anything. Let's take a look at that Euro trade that we got out of. I think it was more disappointing than anything. The fact that a lot of retailers are filing for bankruptcy here in the U.S. is not a good economic sign. They call it an economic storm. I call it an economic tornado, quite honestly. See how it didn't play? Very disappointing trade. I'm glad we got out of it because it didn't, but it didn't go any higher than this either. So what does that mean? Does that mean that it's going to reverse because they did play it here? Remember what I said, they'll usually come and retest. I would actually wait in this regard right here, because since it retested, and they formed this lower than this previous level, I don't want to gamble on going short, but to me, it looks like it's going to go short. So I'll risk 5 pips, but if I'm right, and this thing closes right below this level and right below the point of control, then we should see that trade come right back down. Sometimes they'll take their time in setting these things up. They're not going to move right away. It's one of those where they sort of make you wait for it, and it's tough. I mean, I'll be honest with you. Being patient in FX is not easy because it requires a lot of patience, but in futures it's a little bit more active in the mornings than it is in the evenings, I'll be honest with you, being here in the US, and FX is more active in the late evenings during the European session. That's just the bottom line. So you just have to really find the time that suits you the best to analyze. The Asian session for me hasn't really been doing anything, and that's why I haven't really been trading it. Over a month ago it was very active, but right now it isn't. So you just have to look at it from that perspective and be patient. Again, we talk about patience being a virtue, not one of the best features of mankind. I think if anything, we're probably the most impatient species out there. So I like the sloths, they're very patient. They kick back, relax, sleep, They look at life from a very simplistic perspective, where you and I look at it from a very complicated one, where we're on the groove. See, it didn't play, but I'm not done yet. Again, because they failed miserably. So it's just a matter of me really just waiting for it. Again, I set the levels. I know what I'm comfortable with in this regard. The fact that it came down once, for me, they're retesting it. I think that they will come down, but it's more of just got to wait for it. You just have to wait for it. Any questions, guys? This would be a good moment. No questions? Really? You learned a lot today? I'm astonished. Was the explanation that I gave you good? Was it, was it easy to understand? If not, it's okay. You're not hurting my feelings, We can go over it again on Friday. But see, this trade was early on this morning. I mean, they played it perfectly. Power dot formation, came back, boom, hit the level. Then they pulled this off again right here, and then it just went from 112.50 to 112.65. Not a big trade, 15 pips. That's why I'm saying I would have expected this to play already. And I like the way they're changing. This indicator changes according to how they manipulate order flow. But if you get this same signal, like you got here, and like you got here, the way they pulled down, then basically this might be the one. I'm always looking for the one, but I think it's just a matter of patience, a matter of identifying the resistance and support levels, and just really just waiting for it. Sometimes say it's already starting to come down. And if I'm right about this, then this thing should come down. It's already broken through the trend dots right here. So this candle has to break below this one. And if it does, then at that point, the next one should come crashing down. I'm not expecting a big move. First move is here to 112.57 based on the pivots, 112.56. Next one is to 112.51, which would be 10 pips, or 112.50, and then finally right back here to 112.47. Not a big trade. Sometimes what they'll do is that they'll play the open. And in this case, the open was really down here. That's a big move. I love this trade more than I do this one, to be quite honest with you. But, it's not, I don't think it will be uncalled for them to come to 112.47 or potentially 112.42. It's just a matter of them playing it out. Let's see if it plays. Now, sometimes they will play this trade right off the highs and the lows of the day. You just have to know what you're looking for. And you usually will find some power dot formations in higher time frames. Like right now, maybe it would be a good time for us to look at a 120 minute. Let's see what the 120 says. The higher time frames will usually lead you to a much more profound trade. But you got to know what you're looking for. Give it a second. Give it a second. It's the volume price identifier. Okay, right here. Let's see this bad boy. So see, they did play this trade. See right here? Remember, they just went up, and here they did it again. So hopefully if they close below the point of control, then we should see it come down, and we see the trend stop formulating right here. So if this does come down, and this is a 2-hour, then this thing should come right back down here to 112.35. I'm not saying it's going to come right back here, because I don't think so, but it has a potential. I don't like the way that they've been using the trend dots here in this higher time frame. That's why I'm not really too sold on a long-term trade for it. I think it's really short-term, but it gives the tone We can go down to, let's see, a 60-minute. See what the 60 minutes says. Excuse me. And sometimes you just want to go for your 20, 30 pips, and that's it. Just like we went for that trade in crude, which played out very nicely. Wasn't a big trade, but it was enough to make a difference. 30 cents was 30 cents. Okay, here, see here? Here we have power dots. Now what are we looking for here? Looking for that same trade. They pulled it here. Hopefully this is the one that plays, and if it does, then boom, right back down, baby, which is what we're looking for. That's the strength behind the power dots. When they form, they tell you one thing, which is very important. Volume, momentum, liquidity buildup, which equals trade opportunity. And they're trading right off of this moving average here, which is still a mean reversion trade to the downside. So if it didn't accommodate to go up, then guess what? It has to come right back down one more time before it goes up. Now we can go back to a 10-minute. Now when you put everything together, when you see it all put together, it's just pure trading bliss. I mean, it's synergy at its finest. Understanding how their protocols work and what they've designed them to do is probably the most important thing that we all try and achieve as traders. But see here, understanding, see the fact that it came down and it's testing this, again, using the trend out to the upside is something that I don't like. We know that it's trading off of this level, but we would really need it to come crashing down. And it's not giving us that signal, to be honest with you. And sometimes if you're not getting the signal, then, sometimes it's better to just stay out. We're looking for a specific trade. And if it doesn't give, it doesn't give. Can't force the market to give you something that it's not ready to give, bottom line. So sometimes it's just better to step off, reassess, and to go look for something else. Sometimes something else will be a better trade. Let's take a look at the pound dollar real quickly, because we hadn't looked at that. And that'll be the NC. Crude is down to 43.30. We'll take a look at that one as well. Came right back down. Almost there, guys, almost there. Oh, it's a beautiful day, Monday. Monday is the beginning of the week, beginning of an opportunity. It's exciting. It's inspiring. Oh, yeah, see, that's why that pound Swiss trade wasn't going to go down, but it did look like it was going to go up, though. It probably did based on this trade. And here, power dots, perfect setup. They came back, retested it, did the trade, boom. I'm not sold on it yet, but like I said, if anything, you have a lot of support here. So it looks like it'll play. We're just late. I hate being late. I can't emphasize that enough. If you're late, you're late. Don't look for it. It has to set up properly. You're looking for a specific trade opportunity. Okay, so this is crude. See, it came right back down, and it went actually below, but now we have power dots. I don't like when we have power dots because it really annoys me, even though it's in the middle of the range. It's just one of those things that, just have to, I guess, be careful with them. Got to pivot, so it may break through. We'll see. And that's pretty much all I have for today, ladies and gentlemen. So we actually could have walked away with 40 cents instead of 30 cents on this trade today, but I think we did pretty good for a Monday. Any questions? If not, I wish you a very farewell a very good week. We will be here Thursday morning, 2 a.m. Eastern Time for the trade forecasting for those of you that are signed up for it. And for those of you that are not, you better get signed up. You don't know what you're missing. You know, we're going to be looking for some nice trades, and then we'll see you Friday morning. Have a great week. Have a great trading experience. And I hope that what we went over today was enough to get you back on track in the right direction. Thank you very much for joining us today here at Phoenix Trading Strategies. I look forward to seeing you again. Bye-bye now.